competition, some of which included pricing insurance contracts using machine learning techniques. He has also been involved in various other projects, e.g. Analyzing customer reviews using sentiment analysis. Ted is proficient in Excel, VBA, R, Python. He's also familiar with Profit Professional. He's a nearly qualified actuary with 3 to go, and we hope that he qualifies very, very soon. So over to you, team. Oh yeah, and please welcome them. Do you have this thing up, team? Yeah, thanks.
Thank you.
Approximately 1.3 million people die from road accidents globally every year. And out of this, most countries actually incur a cost of 3% of their GDP. 93% of these deaths happen in low and middle income countries, including Africa. Yet, these countries only have 60% of the world's vehicles. 7% is the statistic for Africa when it comes to greenhouse gas emissions. Greenhouse gas emissions in Africa are growing at a rate of 7% annually. Road traffic accidents are the leading cause of death for children aged between 5 to 29 years old. Road traffic accidents affect people in their prime of life. People aged 15 to 54 years accounted for 58% of all deaths from road traffic accidents worldwide. 73%, or about a quarter, of these deaths are attributed to young males under the age of 25 years, who are 3 times more likely than females to actually die from a road accident. All this against the backdrop that 80% of Kenyans do not have health insurance. My name is Sheila Gatu, and I've been introduced. I'm a fellow of the Institute and Faculty of Actuaries, and I'm so passionate about seeing insurance being used as a vehicle to improve the dignity of lives. This presentation that we're doing today has been informed by my colleague Ted and I, working with different countries in Africa. I've worked in, of course, Kenya, Ghana, and Rwanda physically, but I've also worked virtually with clients in East Africa, West Africa, and South Africa. And so this is informed by observations that we have seen by doing industry studies from around the country. And now I will introduce what I call my partner in crime. Why I call him my partner in crime is because whenever Ted and I are in a room, you can be assured there'll be a lot of noise, laughter, and so we often get into trouble with HR, but it's simply because we love what we do. We really enjoy our jobs. So partner in crime, over to you.
Hi guys, I'm the partner in crime. My name is Ted Miano. As introduced, I'm here to bring the noise and laughter, but not get in trouble with HR. I love finding new ways of innovating insurance. I have worked in numerous countries, as Ezekiel introduced. Thank you for the introduction. Me and Sheila and I work at Zamara. We're colleagues at Zamara. We've been colleagues for the last 4.5 years. And in my free time, I like to do machine learning, code a bit, and enjoy life. Okay, so Sheila has given a very good introduction, giving some statistics of road accidents in Africa in general and low and middle income countries. As seen on the screen, third-party motor insurance is compulsory in very many African countries. And the statistics, the graph on the screen shows the underwriting profits for motor insurance in Kenya for the 3 classes, commercial, PSV, and private. IRA statistics. So you can see motor private has been loss-making for the last 3 years. Not a lot of shock there. Motor commercial has started to be a bit loss-making. And in 2020, they actually all made losses on an underwriting level. Okay, so why are they making losses? What are the problems? Well, next we're going to do a survey. First, we want to find your views. We need to make this interactive on why it is that, what is the biggest compensation of motor vehicle accident victims in Kenya. So we're going to do a small poll. I hope the team can project the poll. So let's give it a little while. But basically, those are the choices. There's lack of awareness by the public on the compensation process. Okay, it's coming. All right. Please go to this website to do it. You'll find all the choices there. So the website is www.menti.com. Don't Google it, just go to the website. At the very top of the website, there's a place you can enter a code. So enter that code. So go to the website for those in the audience and those at home. Here's a camera. Those at home, go to the website and enter the code at the very top. And then it will take you to the survey question and you can answer and submit. So I hope we're all able to access the website, www.menti.com, and that is the code 73777177. I don't have free airtime, so sorry. Is it going through, guys? It's going through? Oh, wonderful. Okay, let's see the live results. People are able to answer it? Okay, Actuaries at work. Okay, it's good, it's good. Oh, 7377, what was the code? Oh, top of the screen, 73777177. Okay. We'll give a few more seconds for guests to answer it. Let's load, let's see the results so far. Which is the leading answer? Okay, most of the people are saying lack of awareness. Delayed settlement of claims is second, undercutting is third. Okay, things are changing. All right, we'll give it a few seconds. Maybe I'll count it down, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1.5, 1, 0.5, 0. Okay, so these are our results. I'm sure they'll keep changing, keep bringing new answers. Unfortunate case of death, insurance should pay compensation. So the people who've been hit or injured, those are the third-party victims. But what tends to happen is when these products are being designed, the third-party victims are not the main focus of the product. And that's a big problem because people end up being undercompensated. The second one, which I think was the third highest answered answer in the poll, is basically underpricing and undercutting, where basically insurance products are making losses because the premiums are too low to the company, not to the policy holder. So the premiums are too low and therefore they're not able to cover the claims and expenses. The third thing is basically, I think we're on the previous slide. Yes, thank you. The third thing is persistent losses in motor insurance. So basically, as we saw in the slides, motor insurance has been making losses, motor private especially, as we all know, but also motor commercial. And the reason for this is underpricing and some of the other reasons we'll talk about. Motor insurance making losses means that it becomes less financially viable when it keeps making losses. And then the fourth thing is lack of synchronized effort by the industry on settling third-party claims out of court. The fifth challenge is high expense ratios. So in Kenya, if you take the expenses of an insurance company, less, not including loss adjustment expenses and commissions, you have an expense ratio of 31.9%, those expenses to net premium. In the US, it's 18%. I know guys are saying it's a US, but still, we're more than 10% behind. So that's a big gap. The next one is lack of insurance expertise in legal proceedings. So where basically when judgments are passed on some of these cases, they're not based on insurance laws and insurance principles. The seventh reason is the challenges in obtaining data from insurance companies. We had a student yesterday who articulated this point. The eighth one is information asymmetry. We put it as number 8, you guys put it as number 1. So, but information asymmetry, where basically when someone has been hit by a car, they don't know how to go through the process of getting compensation. The ninth one is lack of incentive to work with stakeholders on promoting on various goals. So for example, road safety and control of emissions. And the 10th one is fraud. Fraud, for example, with ambulance chasers, distorting evidence, embellishment of claims, etc. So we have a lot of problems in the insurance industry, as you can see, and especially in third-party bodily injury claims. Now, I will talk about a very important vehicle. We know them, we love them, commercial motorcycles, also called boda bodas in slang, right? A lot of us use them. I'm not pointing names, although I'll call myself out. I use them. In Kenya, there are more than 1.4 million riders in the country. 75% of them are youth, 6% of them are female. There are 22 million rides in a day, and that's for all motorcycles, 15 million rides per motorcycle, and they consume 157 billion shillings in fuel every year. So that's a big economy. And that means that they directly affect 5.2 million people in the country, right? That's more than 10% of the population. Note to self, invest in boda bodas. Okay. So that means that they are quite an important industry, a very big industry in the country. However, as we all know intuitively, even without me bringing up the stats, there are certain issues with motorcycles, right? We know they're unsafe, right? We've all had that occasion, not all of us, but many of us, including me, have had conversations with older people, right, on why motorcycles are unsafe, discouraging us to use them, right? And the statistics support that. In Rwanda, insurers say 70% of their claims were caused by motorcycles. In Kenya, 24% of accidents are caused by two-wheeled or three-wheeled vehicles. That's basically motorcycles. A study was done in Canada, so a bit out of Africa, or a lot, where they basically looked at a hospital and they looked at people who are treated from car crashes and from motorcycle crashes. And they determined that if you're in a car crash, your claims, your hospital costs are half someone who was in a motorcycle crash. And they also saw the injury rate. So the rate of people getting injured in motorcycles is 3 times more than a car, which means if these guys get injured, reflects the solvency of insurance companies is more tied to the underlying risk. The third one is telematics. So telematics hasn't been exactly the biggest game changer in the Kenyan market, but there are discussions around it. And telematics can lead to future improvements, where basically instead of just sitting in your office and waiting for a claim, you gamify the experience so that now you can help the policyholder to claim less. The last thing is initiatives. So there have been various initiatives that have been done. There have been various initiatives such as speed governors, surveillance cameras. There have been initiatives such as introducing compulsory safety standards for motorbikes, although compliance is not exactly the best. I know you don't have to say yourself, but people who ride in motorcycles without helmets, you know yourself, it's not a good thing, right? There's also been initiatives like Zusha, which is a Kiswahili word for complain, where basically there's a sticker in a public service vehicle that says if the driver doesn't drive well, you should complain. So there've been some initiatives. But what I want you to take away from this is 2 things. Insurance companies have a problem in making losses in motor insurance, right? We know this. But on the other hand, even though they have problems, it's not like these problems are benefiting the third-party victim. This person who's been hit by a vehicle, a lot of the time, this person is undercompensated. So it's a two-way street, and it doesn't make sense because you'd expect if one problem is there, the other problem is not there, but they're both there. So we're going to present a solution, which is a solution with a lot of social impact and sustainable if done right, and I will hand it over to Sheila.
Thank you, Ted. That has actually laid a very good groundwork framework for our proposed solution, which is what we call a road accident fund. And before we talk about the road accident fund, I first want to define what we call social protection. A social protection fund or a social protection scheme is a scheme that offers a safety net that prevents people from falling into poverty, especially the vulnerable. And so the road call a social protection fund. So a road accident fund is a social protection fund that is found in some countries, and its main purpose is centered around rehabilitating victims of accidents, specifically third-party accidents. Specifically third-party accident victims. So that is their main goal and their main purpose. Most of them are funded by a fuel levy, so it is government funded. However, different financing options are available. Even as we talk about a greater focus that needs to be put on social protection, I believe that the insurance industry has a role to play. And so possible financing options for a road accident fund could include this risk being totally taken away from motor insurers, and then the motor insurance ceding a portion of their premium in return. So there are different financing options. Most road accident funds can actually be started in a small way by what we called a policyholder compensation fund. So for those who are a bit older, you might remember that in Kenya, we used to have a policyholder compensation fund, which used to take care of hit and run accidents, but it has since collapsed. So basically right now in Kenya, if you are a vulnerable person and you're hit by a car or a motorbike, and it's a hit and run, you're on your own. You have to deal with the health costs on your own. You have to rehabilitate yourself back to normal life. And I'm sure you'd agree with me that that is unfair. So that is actually a low-hanging fruit that countries can actually start with, a policyholder compensation fund. Examples of road accident funds in Africa include the one in South Africa, the one in Botswana, and the one in Namibia. So what do Ted and I think are the urgent problems that need to be addressed by a solution like a road accident fund? Number one, the third-party victim, when an accident happens and compensation is needed, is not the central focus of insurance companies. Let's be honest, when we think of third-party victims, we are thinking of costs, we are thinking how these people are the ones who are causing us to be insolvent, they are causing us to have low loss ratios, but no one actually thinks of the impact on the person's life. And one of the things I love is telling stories. So do you mind if I tell you a short story? Do you mind? No, I tell you, okay. So I have a nanny who I love so much. And about 3 years ago, her husband was in an accident. He is a boda driver, and he got into an accident with a car, and it was a hit and run. So of course, he doesn't have a lot of income. And so the injury costs were taken care of by myself and also his family. They actually had to sell property. And so they lost property as a result of this. That same man was the breadwinner of his family. Since then, he's not been able to go back into his full working self. And so obviously the income of the family has been affected. Luckily for him, his wife is working and is able to sustain the children. But imagine if, for example, his wife was not working. And so that's just one example of a family that through no fault on their own has become poor because of a road accident that was somebody else's fault who got away with it. And I don't think it's right that any country should be okay with that, right? So the first problem is that the third party in an accident is not the central person we consider when we are thinking about compensation. Secondly, Ted talked about it, is fraud and manipulation of the law by ambulance chasers and third-party advocates. We also have the fact that there's a student who complained yesterday that there's no data on motor insurance available readily. So that is another problem that we believe can be addressed by the Road Accident Fund. Another problem is that the motor insurers do not have an incentive to actually put efforts in initiatives such as road safety or the reduction of greenhouse gas emissions. And I remember there's someone who asked a question yesterday, or was it made a comment that, you know what, this is another convention where we're going to come and talk about nice things and then we're not going to do anything about it. And I honestly believe it's because there's no incentive, right? Then lastly, also the persistent losses in motor insurance can be addressed by a road accident fund. So before I give you how a road accident fund can address these problems, I'll take you through a case study of the Botswana Road Accident Fund, which is called, in short, the Botswana MVA. So the Botswana MVA, firstly, as actuaries, it's important to note that it is profitable. They made a comprehensive gain last year of about $12 million. No, not last year, sorry, as of 31st December 2019. They made a comprehensive gain and they were solvent, right? So that is a good place to start. Secondly, the Motor Vehicle Accident Fund actually has accidents in Botswana. I've checked this out myself. If you go on the website, you have up-to-date statistics of all accidents in Botswana. The MVA, since inception, has had no incidences of misconduct or managers being fired, right? Because I believe it's easier to govern one fund than very many insurance companies. The MVA has been reviewing its compensation parameters over time to make sure that the scheme is sustainable. And so that solvency in large part has to do with the fact that when they first started the MVA, the compensation parameters were too generous, but they've been reviewed over time. The MVA in Botswana has what we call a shareholder compact, which is like a contract they have with the government. This contract has KPIs. For example, the frequency of accidents, how long it takes to pay a third-party accidental claim, and so on. And so they have an incentive to actually make sure that third-party accident victims are rehabilitated back to normal life. In other words, my nanny's husband, if he was living in Botswana, he would not be in the position he is now, because he would be the KPI of somebody in the motor vehicle accident fund. And we all know it. We all know that our culture is to live for our scorecards, right? So when you're on somebody's scorecard, somebody has an incentive to take care of you. And so this is a very important aspect. The third-party accident victims are on scorecards that are contractual. The MVA provides assistance, including grants, to raise awareness on road safety. They also have a service charter, and that service charter includes turnaround times for claims. So again, here comes the incentive. They cannot turn you away or delay you on purpose from getting your claim, because they have turnaround times, KPIs that they need to comply with. And then lastly, they've intensified road safety initiatives and awareness over the years. They normally go to workplaces. Remember the statistics I started with. Road accidents happen mostly with young people. And so they do a lot of initiatives among young people and in workplaces, right? So how do I believe that an example of a road accident fund can be a solution to what Ted described for us? We believe, Ted and I, from the studies that we've done, that a road accident fund can be an ESG solution. So I'm going to first start by talking about the S in ESG. How can it provide a social impact solution? Number one, the road accident victim is the client, the third-party victim is the client of the road accident fund. And so it is its job, it's the job of the fund to ensure that not only is this third-party accident victim given money, that they are actually rehabilitated back to normal life. In other words, it is their duty to make sure that my nanny's husband is working again, and that he does not have to sell his property for him to go back to working again, right? Then in terms of financial sustainability, if you look at the parameters that Ted talked about, frequency and severity. Frequency is the likelihood of a claim happening, and severity is the average cost of a claim. This is our bread and butter when it comes to general insurers. How would a road accident fund be able to reduce frequency and severity? Number one, when it comes to frequency, which is the likelihood of a claim, their KPIs, part of their KPIs would be reducing the frequency of accidents. And so they would have an incentive to actually have road awareness initiatives, including grants to communities for such issues. When it comes to severity, which is the average cost of a claim, they would actually, because it's one fund, they would be able to easily have what we call enough resources to invest in scene of the accident emergency response services. So what this means is that it has been proven that if you attend to an accident victim immediately when they get injured, the cost of treating them is much less. And so because it would be one big pool with more resources, they could invest in that, make sure that accident victims are treated on the spot, and so they could actually achieve lower severity. At the same time, with such a situation, there would be no need for ambulance chasers and third-party lawyers, right? Because they would be there at the scene of the accident. And we all know that ambulance chasers are the cause of inflation of claims. And so, the last thing also is lower expense ratios because it's because of economies of scale. And so it would be like they would be able to achieve lower expense ratios because it's a bigger fund. The last point on financial sustainability is we remember the insurance principles that we were all taught when we started actuarial science. The law of large numbers, and what was the second one? Just shout the answer. One insurance principle, the basics that you remember. Starts with a P. Pooling. Right? Pooling. We've forgotten the basics. Okay. So the law of large numbers and pooling. A road accident fund would take advantage of that. Because if you think about it right now, we have over 40 motor insurers in Kenya. So you can think of this as one risk, which is the risk of being injured or losing income due to an accident. One risk that is being dealt with by more than 40 different pools, fragmented pools. So what happens with that is that there's no cross-subsidization. If you look in any one insurance company, the cross-subsidization is very little. But if this one risk was managed by one big pool, then there would be cross-subsidization. A very good example of this, I've worked for a PSV insurer, no cross-subsidization at all, because we all know matatus are risky when it comes to motor insurance, and so you can imagine the financial health, right? So it actually offers a solution to the many fragmented pools that we have by offering one pool to deal with that one risk. And then in terms of data, a road accident fund would have all data on accidents all over the country. And so in terms of research, this would be helpful. And then if any databases needed to be built, it would be very easy. Say a fraudsters database or coming up with an industry-wide no claims discount. Such things would be very easy if you had a road accident fund. In conclusion, we've dealt with the S part of ESG, which is the social impact. But what about the environmental and the governance? When I talked about the MVA fund, I found it very interesting that they haven't had any instances of management misbehaving, basically. And I would argue that it is much easier to enforce corporate governance with one large insurer as opposed to more than 40 different insurance companies. And so, because they would have targets and they would be governed in a more watertight way, of course, depending on which government you're talking about, then governance would be easier to enforce. When it comes to road safety, they would have an incentive to actually be involved in road safety awareness initiatives. Why? Because they have KPIs, they need to reduce frequency of accidents. And then when it comes to greenhouse gas emissions, I believe that the reason why we're having a challenge with motorbikes specifically is because they are not formalized. And I can say this with confidence because I live in Rwanda, and the motorbike industry there is much more formal than it is here. And they've been able to achieve a few things because of that. So because of the fact that the road accident fund would have data on all motorbikes and all cars, they could work with, for example, NTSA to formalize that industry. What do I mean by formalizing? They would find a way to provide incentives for, say, buying an electric motorbike or penalties. And so basically formalizing the motorbike industry could be made easier. And the same thing with greenhouse gas emissions. The road accident fund, because they have data on all motorcycles and all cars, could easily work with NTSA to provide incentives for use of cleaner fuel. In Africa, we may not be able to talk about electric cars right now, but electric motorbikes, for example, are a low-hanging fruit. And there are some companies who have actually started working on the production of electric motorbikes here in Kenya and in Rwanda as well. If you look online, it's a reality. So whereas when we think of electric cars, we think of Elon Musk, what about electric motorbikes? We can start with that. And so it would be very easy for NTSA to work with, for example, the Road Accident Fund to actually contribute to initiatives when it comes to greenhouse gas emissions. And so from a policy level, it would be easier to actually provide incentives. So what I would say in conclusion is that I believe that the reason why the situation with third-party motor accident victims is the way it is in Kenya is that they are on nobody's KPI. They are on nobody's scorecard. As insurance companies, there is no one who will measure us according to the turnaround times for third-party accident victims. It will not be penalized anywhere if they take long. Maybe it will be on the news at some point, but we are all doing it, right? But I believe that with the Road Accident Fund, it's an easy way through policy to actually give incentives to take care of third-party accident victims. And I will leave you with something to ponder on. Today, I've told you the story of my nanny's husband, but you could be next. You could actually be next. You might have assets right now, but if you got into a really bad road accident, all your assets could disappear like that. Your family could lose a breadwinner. So is this something worth thinking about? Thank you. So we invite questions now. Thank you very much. I'll start with Elias.
Yeah, questions? Elias says FSD, you should fund this and put seed capital. So you should start with money, then the question.
Thank you. Now, okay, fine. It's green, and I was trying to get something green. Sorry, I've put on red, but there are two things that I want to bring out. One is in regard to how do we make this solution green, because on the statistics you talked about 70% accidents. We have so many motorcycles. I wish I could have seen some statistics on what emissions do these borders bring. And then from there, we look at if we try to reduce them by 50%, bring electric motorcycles, right? How many, maybe how do we control that? The second thing you discussed about the incentives. I don't know whether you are aware of the green fiscal initiatives, that incentives that the government is putting together, like a policy. Maybe it would be good to inform some of those incentives around the borders, because remember, the reason why the government brought borders through President Kibaki was to make the youths get something to do, right? So it kind of, in one side, it has kind of helped the young guys to get jobs. So there'll be a heavy transition risk from just the transformation. I wouldn't have liked to see what will be the transition like, right? Yeah, then there was this case study on Botswana. Botswana has more cows than people. So if you look at Botswana as a case study and you brought that to Kenya, you know, I don't see how we could compare that RAF to Kenya, because Botswana has like 1 million or so people. They have so many cows. They drink milk and even shower with milk. So I would have wanted to see like a comparison. It's good to have that in Kenya. It requires a lot of structural changes, given that the Kenyan market is so much fragmented. You'll get that the borders, say in Migori, are well structured than the borders in Kiambu. And then if you go to, and it's a reality, if you go to borders in Migori County, they're more structured than the borders in Kiambu County, because most of the time you'll get that you don't know who is riding a border in Kiambu. He might want to shoot you dead. Yeah, he's carrying a thug at the back, but that is totally different. If your border is stolen in Migori, they'll be able to get that person that has stolen it within 30 minutes. And even they might even go and lynch the homes where this person is coming from. So there's a lot of things that maybe it's a good project. We might need to look at it further, but maybe we just need to look at what are these incentives, how do we connect it to this for the purposes to avoid greenwashing. In the morning, we talked about greenwashing, right? So we might call it green, but at the end of the day, you try and connect that. But I would have loved to see some statistics on what changes we are likely to get. It's more of a comment, but it's good to see it further.
Elias, you've not given us the money. Or you said it is the greenwashing to end, to be blackwashing. Okay.
Thank you so much, Elias. And actually, this is the first time that we have presented this to an audience. And this is exactly the reason why we presented it, so we can get comments and feedback. So thank you very much. And the next time you see this presentation, we'll have answered your questions. But just to make a comment in terms of comparing Botswana with Kenya, you're right. And I'll respond to that in two ways. South Africa also has a road accident fund. Unfortunately, that one has been mismanaged, but that doesn't have to be the case in Kenya, for example. So South Africa is another good example where it's a country even much bigger than in Kenya, and they have one. But secondly, there's a long-hanging fruit. Even if we say the road accident fund is not practical in Kenya, what about a policyholder compensation fund? What happened to it? Why is it that when you're in a hit and run accident, you don't get compensated? So yes, I get your point. And I think in Kenya, the low-hanging fruit could be at least a policyholder compensation fund. But thank you very much. Very useful questions.
Okay, more questions. As the second person is taking a question, are side mirrors covered when they're removed?
This is third party. We're focusing on the third party today, not the owner of the car.
Thank you for the amazing presentation. Elias, as you're asking the question, I just thought the connection between the number of motorbikes, the fuel they're consuming, and if they went green. I think that would be a nice way to look at reductions. My question is, assuming your husband's nanny didn't have a connection with you, how will he find out about this fund?
Very good question. And that is where now the operations of governing one fund becomes easier. So they could actually raise awareness, for example, through social. You see the way NHIF does. There's no one who doesn't know about NHIF, even in Mashinani. They would actually be they would be able to easily transmit information about the road accident fund, whether it be through SMSs, through social media, through even just using community volunteers to go to the communities and tell people about this road accident fund. So the information, the public awareness initiatives would be centered around simplifying the process. It's a three-step process. If you're in an accident, immediately take out your phone, probably send a USSD number to this particular number, tell them about the scene of the accident, make sure you don't leave. If you go to hospital, make sure you keep the receipts and so on. So they would actually have to borrow from NHIF. I would say NHIF has done, we can say a lot about NHIF, but I believe they've done a very good job in terms of public awareness initiatives. So they could borrow a leaf from that. Yeah.
Any more questions? Dots. Can this fund be a subset of NHIF, accident medical?
Very good idea. That is very possible. Very possible.
Okay. Thank you for the presentation. I have two questions to ask. One is you've given us, I think in your proposal, you are saying either financing via fuel levy or maybe a portion of the motor premiums. The question is, which options are you proposing, I think, for further discussion, I think, to the relevant people? And maybe as you are proposing, maybe you can highlight for us the pros and cons, I think, for our better understanding. Then the second question is part also of a comment is, I think we've observed, particularly with motor insurance, where it's something that really pains when you see like the bulk of third-party claims when they go to the lawyers, and maybe we don't have enough statistics within our market of what the lawyers take and what really ends up to the third-party claimant. But on a few cases I've seen even as high as the lawyer fees going as high as 70%. And when you look at motor claims, particularly the third party, leave their own damage, if that aspect of legal claims the legal fees can be managed, I'm sure most of the motor pool can become profitable. Now, in what you're proposing, I think you are mentioning that it is likely to do away with those costs of legal fees. So maybe just to quantify, what are the likely savings? I think maybe from the Kenyan market or the Botswana, what is the likely legal savings that such a fund can bring into the market? I think if you can be able to either share a rough estimate, I think it can be an easier sell to the market if that information can be availed. Thank you.
Thank you so much. So on your first question, the model that I would be proposing would depend on the country. So for example, for a country that prioritizes social protection, it might be an easier sell to introduce a fuel levy, right? But for a country like Kenya, of course, where we're still heavily taxed, then maybe the better option would be calculating how much premium should be given from motor insurers to the road accident fund. So I would say my proposal would depend on the country that I am proposing it to, based on the fiscal space of that specific country. But for Kenya specifically, I would definitely advise the option of the motor insurer ceding a portion. And then if there's any shortfall, then it's possible to supplement that with some tax from another subset of the economy. And then just to add more on that, when it comes to social health insurance, for example, you have countries like India where insurance companies collect premium and then they actually cede a portion of that premium to a third-party administrator to administer medical insurance claims for the masses. So it would be a very similar model to that particular model that's done in India. So it's worked there for medical insurance, and I believe it could actually work for the road accident fund if the calculations are done correctly. The second question is a very good one, and it will definitely form part of the next presentation. It's definitely something that we would need to add in terms of those statistics. So thank you for that feedback. Ted, do you have anything to add?
Yeah, we don't have any statistics on the portion that would go to legal costs, but the advantage of such a fund is the legal cost would not be as high, because if there's a fund and everyone needs to know about a fund, that kind of more or less eliminates the need for ambulance chasers, because basically the person who's been hit knows exactly where to go. And therefore, all these costs that would have gone to legal, you kind of cut out the middleman. And therefore, there's that advantage where now the policyholder gets compensated as well as it being sustainable. Yeah.
But we'll definitely try and see using the countries that we studied, whether we can quantify that for the next presentation. Thank you.
Thank you, Sheila and Teti, for the presentation. Very interesting, because you're addressing a very painful problem that we have in the country. Mine is just a suggestion. The first one is when you think of data, don't look at data only from the pricing point of view. Collect also data that will assist an actuary to cost what's the loss of income, because that's what has happened in most countries. Yeah. I mean, they know if somebody is involved in this type of accident, it will roughly cost this much. How much it will cost to hire an ambulance, how much it will cost a doctor, and all this. So we can be able to determine the loss of income. That's very critical. Think about that when you collect data. The other thing is involvement of actuaries in determining actually the loss of income, not just the premium. What some countries they have done is, if somebody has been involved in an accident, there's a claim to be made. Yeah. The lawyer must get a figure certified by an actuary to present to court. The court will not listen to anything unless an actuary has provided a certificate of loss of income. Right. That's easier. Then the third one is also on lawyers' fees. They should, in some countries, they are capped. This idea where you find maybe a lawyer takes about 70% of the compensation does not arise. So those are some of the three things I would suggest that you think about if they make sense.
That actually makes a lot of sense. Thank you. And I would actually add to that and say that, you know, because I believe this idea, we're going to take it forward using funds from Elias. One of the things that a road accident fund, an advantage they would have is that they would have their own enacting legislation. And so such things like what you've said could actually be part of that enacting legislation. So thank you very much.
Okay, thank you very much. Because of time, we have to be back here by 2:15. And for the people watching at home, it's time for you to take a break also. So what I'll do is I'll let our chair or vice chair to Moses, President, please come and give us a token of thanks to the speakers who have done a good job. Next time, make sure you leave with money from FSD. I'm sure they have funded many projects. Most people don't know this, but FSD was the one which gave seed capital for M-Pesa, if you didn't know. They're the ones who gave the initial money for M-Pesa to start. So if the idea is good, I'm sure they'll fund it. So yeah, thank you very much, everybody. So Sheila, please receive a token from our president, Moses. Let's clap, yeah? Thank you. Thank you very much. Teddy, thank you very much for the great talk.